I think we are live now.
I think I can start now.
Yeah.
Hi, good morning, everyone. I'm Vanita. I handle marketing and customer experience for Moneyjar, and that is Rohan. I think he'll give his introduction himself.
Hi, guys. My name is Rohan, and I'm the co-founder of Moneyjar. Welcome to our first ever live session. We're just going to wait for a couple of minutes to get more people to join in, and then we'll start the session. That's fine.
Yeah.
Nice.
So you just maybe want to talk about Moneyjar, give them something
Sure.
to think about.
Yeah. So I think we started Moneyjar to address two very important questions. The first one was how do we get good financial advice available to people no matter how big the amount of money they have to invest, and how can that advice be tailored to their exact needs. So one problem that we saw was a lot of young people tend to go to a bank RM or an insurance advisor or their family friend to get investment advice. And from our experience, that advice typically always tends to be substandard and not really attuned to their needs. I believe, I'm sure, Vinita, you've had an experience like that.
I've had the worst experience until I joined.
Don't worry now, you have Moneyjar, right?
I think we need to convince them that they have Moneyjar now.
Sure, yeah. So yeah, that was by far one of our first primary reasons why we started Moneyjar. The other was also to ensure that once you have good advice on how do you act on that, because that's the most important part of managing your money. So what we've tried to do is build a platform where the entire process is completely online, where you never have to fill paperwork or you never have to sign a check, and you can invest sitting from the comfort of your home. Our hypothesis is that if you're okay buying clothes online, why not invest online too? And I believe with Moneyjar, we've tried to ensure that that is a real possibility. So maybe after this session's done, and if it's helpful for you, log on to Moneyjar and try and see for yourself what we are talking about.
So I'm just going to take you through the basic drill. It's a live video. You post questions, we answer questions, and then you are as good as we are about finance. So to begin with, I think, Rohan, we've got our first question.
Sure.
That's Priya. Hi, Priya. So the question is, what percentage of your income or your salary should be used as your investments?
Sure. Over the course of the last decade, since I've been in finance, I think that is by far the single most common question that most people tend to ask for. When you're old enough and you start earning money, there's a lot of times that you have no idea on how much money to invest, or like how much to put aside. So I have a couple of views on that I want to share. The most important thing is just the fact that you should start the act of investing should start it, so that every month, even before you do your discretionary expenses, which are like going out, eating out at restaurants, it is important that you set aside money for investing. Because if you're able to do that, you'd be more disciplined with your investing regime. So there is a thumb rule that is there in finance, which is called the 50-30-20 thumb rule. So what that thumb rule states is that 50% of your income should go towards important expenses, so which is rent, food, paying your electricity bills, your telephone. So that's about 50% of your monthly income. After that, 30% of your income should be towards discretionary expenses. So they might be like going out, eating out at a restaurant, things like that. And the thumb rule states that about 20% of your income should be set aside for investing. So, but here's a piece of advice. Most people, they tend to invest after they've completed all their expenses in a month. So, but what I would suggest is, as soon as you receive your salary, if you're able to just set aside 20% every month on month, aside for investing right at the start, it will ensure that you're more disciplined with your money, right? Like once some money is set aside, you tend not to use it for expenses that may or may not be necessary. So I think having a 50-30-20 thumb rule is a great way to start your investing journey.
That's pretty cool. So there's one question I had.
Sure.
So there's a lot of people who tell you that mutual fund में invest करो.
Sure.
But speaking from the point of view of a sheer beginner, how do I know which mutual funds I should invest in? Because there are like a whole lot of them out there.
Sure. Yeah, I think that's a great question. So today there are about 3,000 mutual fund schemes that are available. So if you're a first-time investor, I definitely don't recommend the DIY route where you're trying to figure out, which mutual funds to buy. One of the biggest mistakes that people make, like especially first-time investors, is they tend to buy mutual funds that have just done good, in the past, which is not a good way to invest at all, because there might be mutual funds that have done good in the past that may not do good going forward. So it's always important to get a good advisor to go through your exact circumstances and get advice on which mutual funds to invest in. Another thing that I would like to tell you is that a lot of people think about mutual funds as risky, that mutual fund mein invest kiya, stock market jaisa upar niche aata hai. So there is something that a lot of people don't know, is something called debt mutual funds, which I think everyone should know about. So debt mutual funds are a great alternative to fixed deposits, where it's not that risky at all, and they tend to give you higher returns than fixed deposits.
So see, I think that's what Neha Sharma is asking us. She's asking if mutual funds are risky. Are they risky?
Neha, I read your mind, right? So, but so that's a great question, and I know a lot of people, have that in their head. So definitely, any investment that is done, there is a element of risk involved in every investment that you do. So there are two kinds of mutual funds. One is called equity mutual funds. Those are the ones that invest in the stock market. So I would say they are riskier if you only invest in them for the short term. So you cannot expect to earn returns always in say 3 months or 6 months. If you're willing to be invested for a longer time, so if you're willing to invest for 3 to 5 years, you will always invariably see great returns on your funds. And if you want to invest for an amount of time less than that, there's something called debt mutual funds, which are like a great alternative for fixed deposits, so which are not risky at all. So that is something that is a great way to start off your investing journey.
So I think when we're talking about staying invested for a longer period of time, what would you say is an ideal time span?
Sure. So I think if you're younger, if you're in your 20s or even in your early 30s, you can afford to stay invested for longer because you may not need the money. And if you're investing in equity mutual funds, I would definitely recommend being invested for at least 3 years, for a minimum of 3 years. And I would say the longer you're invested, the better are your chances of earning great returns.
So also Sridhar is just come in.
Hey Sridhar.
So he's asking us if there are any safe mutual funds, because considering some of them are risky and it's not like 100% risk-free.
Sure, yeah. So that's one thing that I want every young person to know. Look it up. It's called debt mutual funds. So these are mutual funds that do not invest in the stock market, that that typically don't go down. While the expected returns might be a little lower than maybe equity mutual funds, but there is an element of safety in those funds, and they are a great alternative to fixed deposits. So if fixed deposits, if you withdraw them before their timeline, you are subject to a penalty charge. There's TDS cut on fixed deposits. With debt mutual funds, you can invest and withdraw whenever you like without any exit loads. So it gives you the sort of flexibility also that you can withdraw whenever you need the money, and they give you better returns than fixed deposits. So if anything you can take out of this session is say no to fixed deposits.
Absolutely. I think I wouldn't agree more. So I think things that we should keep in mind is that debt mutual funds are not investing in the stock market. They don't carry an exit load. And they're very, very safe.
Yeah, they are highly, way more safer than equity mutual funds, similar to fixed deposits.
Yeah, Rohit is in, and Rohit asks, what's your take on mutual funds shutting off fresh SIPs? They have reopened now, and is it a good time to start? an SIP in such funds?
Rohit, great question. And from your question, I also believe that you are an experienced investor. So you are right. There are some funds that got so popular that they shut off any fresh money into them. So the one that comes to my mind is the SBI small cap scheme. There's other funds also. So one thing, my personal opinion about this is that it is not wise to invest in these funds, and I'll tell you why. The entire reason why these funds shut off was they felt that they had too much money and they didn't have good avenues to invest all that money. And these are ones that typically have performed really well in the past. So like I said before, that there are times when funds that have done really well in the past and have like start getting bigger AUMs. When funds start getting bigger, they typically tend to underperform going ahead in the future. So my advice to you would be not to just chase the most popular mutual funds that are out there. You will see that invariably in the coming years you will underperform. So it is important to look at funds that may not have done good in the past but will do good in the future, and that is something we at Moneyjar take very seriously. We do all the heavy lifting in the back end and ensure that the funds we recommend to you are the ones that will do well in the future, because that's what matters.
And that's what Moneyjar does for you. So Harsh is asking us, are returns in mutual funds guaranteed? I'd like to know that.
Yeah. So again, like another question that like I've received so many times. So and like I'll be very upfront about it. No mutual fund can ever guarantee you return. So if any advisor of yours tells you that, hey, Vinita, invest in this fund, there's 8% guaranteed, that's a lie. Like mutual funds by regulation cannot guarantee funds. So the entire logic of investing is that if you take on risk, you are subject to higher returns. So one thing is there though, debt mutual funds, typically it is easy to forecast what sort of returns they can earn in the future. But still, there is no guarantee on any mutual fund. So, and I think it is important that everyone knows that, so that you don't set yourself up for disappointment later. Because a lot of times happens that an advisor says that you'll get 14% or 16% on a fund, and if that doesn't work out, people typically get disappointed by their advisor. So we at Moneyjar always take that seriously, and we will never ever tell anyone that returns are guaranteed.
So there's one thing that I've very commonly heard, like, higher the risks, higher the returns. Is that even a thing when it comes to mutual funds, or is it just something people are saying to encourage an investment?
Sure, yeah. I think with any investment that is there, risk and return play a very, like similar role. That typically there are times when you take higher risk, you are able to get higher returns on this. So think about cryptocurrency. So Bitcoin, I mean, sure, so it was giving a lot of pretty high returns in the middle, but it also then dropped more than 50%. So most of the times where there is high risk, there's also possibility for higher returns. How you can be good at investing is find instruments that give you high returns while taking lower risk. So even with the mutual funds that we try and select funds that do not have enough perceived risk, but they tend to give you higher returns. So that is how you get good at it.
Okay, so we've got Prateek, Neha, and Harsh and Kostu, who've joined us recently. You want to say hi?
Hey Kostu, how's it going?
So Prateek asks, how much of my investments can I withdraw at a time? Is it possible to withdraw a smaller amount?
Sure.
As per my requirements?
Sure. Great question, Prateek. So that is by far one of the best features of mutual funds. So if you've typically ever invested in a fixed deposit, you know that if you withdraw before, say, a 1 year tenure is done for a 1 year fixed deposit, you're subject to a penalty charge, and you cannot withdraw part of the fixed deposit. You either withdraw the entire thing or you don't withdraw. Funds, and that is one of my favorite features in a mutual fund, is the liquidity it provides. So liquidity is basically the ability for you to withdraw your money anytime you want. So there is only one class of mutual funds that has a lock-in called the ELSS fund. So those are tax saver funds, which we'll get to later. But other than that, any mutual fund that you invest in, an open-ended fund, you can withdraw whenever you want. You can withdraw part of your money, doesn't have to be the entire amount, and that really provides a compelling reason for you to invest in mutual funds.
Okay. Neha wants to know, for people like me who are safe investors,
Sure.
who haven't gone beyond FDs and PPFs, what's your investment advice?
Sure. So, great question again, Neha. And I think when you first start investing in mutual funds, a lot of people will recommend you just because that you're young, that you start investing in riskier funds, which are equity mutual funds. But I have a contrarian view on that. I think when you first start investing, no matter how young or old you are or how much risk you can take, I think it's best to start off with debt and liquid mutual funds. So these are the safe mutual funds that we are talking about. So what they do is they give you a sort of a gentle onboarding for investing, like that. Because if you invested in a risky fund right away, and if it fell a lot, like the returns fell, like you have negative returns, it's very likely that you'll get scared and stop investing after a few months. So I would always recommend, Neha, that you start off with something called debt mutual funds that give you better returns than fixed deposits, are fairly safe, and which you can withdraw anytime you want. So you could literally, to even see how investing in mutual funds is, do an investment in a debt mutual fund today and withdraw after 5 days, and there is no penalty involved, and you can withdraw as much as you want.
Okay. So, Kostubas says, what if I wish to withdraw my funds? Is there a lock-in period, or can I just withdraw at any time I want?
Sure. So, Kaustubh, there is a certain class of mutual funds called the tax saver mutual funds. So those have a 3-year lock-in where you can't withdraw before that at all. Another thing is there is something called equity mutual funds. So those are the ones that invest in the stock market. Those you can withdraw whenever you want. But if you typically withdraw before a year, you're subject to a 1% penalty charge. And in any case, I wouldn't recommend you invest in equity mutual funds if you're thinking about investing it for less than a year. But the thing is, you can withdraw them, but you are subject to a penalty charge. And then there are certain funds called debt mutual funds or liquid mutual funds, which are safer and that typically don't have an exit load. So you can withdraw those anytime you want.
Okay. There's Ankit Tanna who's asking us, should I go with small cap funds or be comparatively safe with larger cap?
Sure, great question, Ankit. And I think that's a question that a lot of people are asking nowadays because, in the last few years, small cap funds have given really, really good returns. So it's also brought about a negative connotation because people expect 15% returns, 20% returns a year as the new normal. Okay. But what I'm sitting here trying to tell you is that that is not always going to be a case. And according to me, even though small caps have given great returns in the past years, there are a lot of risks involved currently. So my advice to you would be at this present moment to be in large caps, especially if you want to be in equity. And if you want to take on a little more risk, you can look at multi-cap funds, which invest in a combination of small cap, mid cap, and large cap funds. Okay. So, and I want to just take this moment to tell people what a small cap, mid cap, or large cap fund means. Yes. Now that Ankit's brought it up. So basically, when you're investing in a equity mutual fund, you can either choose a small, large, or a mid cap fund. Okay. So large cap fund just invests in really big blue chip companies where the risk is slightly lower. Okay. And then mid cap funds are slightly smaller companies where again risk reward, like higher risk but higher chance of returns. Okay. And small cap funds are ones that invest in extremely small companies that not too many people know about. So again, the risk involved is high, but the return potential is also high. Yeah. So, but to answer your questions, I think large caps definitely right now, with maybe a hint of multi-cap funds, but you would do good not to invest in small caps for now.
Okay. So, Neha wants to know if Moneyjar can help salaried people like myself.
Sure, yeah. I think Neha, Moneyjar was made specifically for people like, young people that do draw a salary, that have a fixed income every month. So one thing I would suggest you to do that is that there is something called an SIP. Basically, what happens is, and certain amount of money is debited from your account every month and then invested in mutual funds. So using Moneyjar, you can set up an SIP jar where what happens is the whole point of an SIP is that it automates the act of investing for you. So you don't have to worry about putting money every month physically. You might forget, or you may not, or might feel lazy. So it imagine someone running 10 kilometers for you every day so that you can get healthy.
Wow.
So an SIP is great in that regard. Couple of good things about an SIP: say if you miss an installment, if you don't have money in your account, no penalties, and you can stop an SIP anytime you want. So say after 3 months you feel that you don't have the money to put in, in investments for that month, you can just stop it and start it again anytime you want.
Okay.
So yeah, I think we have a lot of investment options for people that get a salary every month, and we'd be happy to help you out with that.
So Rohit says, thank you for your answer. How do I ensure that I have a dedicated quarterly payout from my mutual fund, like the way I get dividends from shares? I see that Moneyjar only has growth funds.
Sure, Rohit, I think also that's a great question. And there's a reason why we've kept it like that. The thing with Moneyjar is that we target a lot of younger people, or even I would say middle-aged people. Should always invest in the growth schemes rather than having a dividend scheme. That is because when you get a dividend from a mutual fund, you might think that it's tax-free because you're not being taxed, but the mutual fund actually pays a tax on your behalf to the government on the dividend gives you. So you're actually getting taxed on the dividends. So if you truly do want like a quarterly payout from the funds, a better way is to just, you can contact us and we'll set up something called a systematic withdrawal plan. So what that means is that automatically a certain amount of money will be withdrawn from your funds, either monthly or quarterly.
Okay.
So which is a better option than to have a dividend option.
That's actually great. So also, I think this is a star question.
Sure.
Do mutual funds give you any tax benefits? I think everyone wants to know. The nation wants to know.
Yeah, I think one of our favorite pastimes or like our favorite hobbies is figuring out how to save
tax.
Yeah, and I think the good news is that mutual funds are actually a great way to save tax. So for someone who doesn't know, I'm sure you've heard of something called an 80C section. So basically, there are few different ways how you can save tax. So there's obviously, I don't know if most people have heard about PPF, which is one of the options. There's NPS, which is a national pension scheme. There's a 5-year fixed deposit that you can do to specifically save tax. And then obviously there are equity mutual funds. Now I'll tell you why equity mutual funds, according to me, are the best way to save tax. So PPF has a 15-year lock-in, like a 5-year FD has a 5-year lock-in. The equity mutual fund has the lowest lock-in, which is only 3 years. And also, it's typically over a longer course of time, it provides better returns than other options. So I think equity mutual funds are a great way to save tax. Just a couple of things you remember: you have to invest in specific funds. So those are called ELSS funds. So always look for that when you're doing your tax saving. 2, there's going to be a lock-in for 3 years, so you can't withdraw before the 3 years done. And also, you would be subject to tax on the gains that you accrue out of the fund after 3 years or whenever you withdraw.
That's great. Yeah. So also, there's Prateek who wants to know what kind of returns are your users getting on Moneyjar?
Sure. So, Moneyjar has been live for about 3 odd months now, and we are happy to say that right from the start. So when we launched, the market went through a slight correction in the next couple of months. So we had a specific fund called the ICICI Focused Fund, which a lot of our users had, and which I'm happy to say was one of the best performing funds. Even when times were bad, when the market was falling, that fund had the gold because it was undervalued, that it stayed true to its performance. So what I can say is, if you invest on Moneyjar, you'll have different kinds of returns based on the risks that you take. But what our biggest aim is that we ensure that for the risk you're taking, you end up having the highest returns that you get. And we do that by spending a lot of time on research, on figuring out which investments to recommend to our users, and what risks should a certain user take, and that cannot be taken lightly. And that is differentiation as compared to a bank RM who just reads off a menu card. कि विनीता मैम ये 2 फंड लो, डबल होएगा आपका पैसा 3 साल में. We don't do that.
I don't think anybody wants that.
Yeah, we ensure that we spend a lot of time with research. We ensure that you want the highest returns for the risk you're taking.
Still Moneyjar. So Shrida wants to know, what does it cost to invest in a fund? And do I need to understand stocks, bonds, money markets before I even invest?
Sridhar, great question. So first, investing in mutual funds is completely free. The way we earn our money is that we get a small commission from the mutual funds that you invest in. And also the good thing about mutual funds is that you really don't need to understand how stocks or bonds or the money market works in order to invest. But I would always suggest you to know, like knowledge is power, in the sense that managing money is something that everyone should know. Like just as they know how to brush, like no matter who you are, at some point in your life you will have a situation where you're managing money.
Right.
And if you are aware of how it works, it will always give you more power to make good decisions. And unfortunately, the financial services industry works a lot on ignorance, where people sell you investments just because they know that you don't know. So even though it is not necessary to know about stocks or the money market or debt instruments, I would definitely suggest that you have information about that. Yeah. Even if you have a great advisor, because it will always empower you. It's a life skill that you should have. So
yeah, but don't you think there are times when there are a lot of people who are absolutely unaware of financial markets or stocks and bonds? So like just a contrary view that it might sometimes actually discourage them or scare them off.
Yeah, I think that is very true, because the way the financial services industry works, also they throw a lot of jargon at you and make it very intimidating, and overwhelming when you even try and learn more about it. So what we have tried to do at Moneyjar is also through our blog make very like concepts very simple. So maybe you can go check out our blog.
Yeah, we have actually tried to simplify it to a very layman level. So nobody really has issues understanding what finances are. I think you should definitely check it out.
Sure.
So yeah, there's Ankit who wants to know, how is Moneyjar going to help me maximize my returns? Do I give you money and you invest, or is my money invested in mutual funds directly?
Sure, Ankit, great question, and like I'm glad you brought this up, because I want to let everyone know, because online investing is still not that popular in India. One of the questions that a lot of our users have is, how safe is our money with you? Like you're a startup, like are you going to be okay with money? Let me just tell you that Moneyjar at no point handles your money, like the money that you invest in. Never ever passes through our bank account. So it goes directly to the mutual fund houses that you invest in. We are only an enabler for the investment. So no matter who you invest through, so even if you invest through Moneyjar, those investments are always held in your name. The money goes directly to the mutual fund houses, and you can redeem or your investments. Even aside from, you don't have to go through us to redeem your investments. So that is one thing that I've always wanted people to know, that Moneyjar is only an enabler for investments. We don't handle your money physically at any point in time. So thanks for that question, Ankit.
Yeah. So there's Jasmeet, who's she's a novice investor.
Hi, Jasmeet.
So she wants to know how to select a mutual fund. Being somebody who's completely new to the domain, how do you begin? Where do you begin? And how do you choose a mutual fund?
Sure, great question, Jasmeet. I think a lot of people during our session and like during our interactions with our users have asked that question, because there are so many people now that are thinking about starting to invest in mutual funds. And like I said before, the best way to do it is to start off with something called debt funds. So debt funds are safe mutual funds that do not have too many ups and downs, and that those you can withdraw at any point in time. So what I would suggest is put 100% of your money in a debt fund, get more comfortable with the act of investing, and then slowly start transferring out money into equity funds. So as a new user, just remember one thing: there are two kinds of funds: equity mutual funds, which are higher risk but possibility of higher returns, and debt funds, which are lower returns but lower risk. And once you are aware of both of these concepts, basically then it just becomes a function of you allocating money in proportion to higher risk, higher return funds, and lower risk, lower return funds. And if you ever want to know individual mutual funds that you want to invest in, don't be afraid to give us a call. We have a no strings attached advice policy, where even if you don't invest through Moneyjar, we will always provide you good investing advice from a SEBI registered investment advisor. So
There's one viewer we have, his name is Shivakant Rao.
Sure.
Happens to be a friend of mine, and I know he's never invested.
Hi,
Yeah.
Shivkant.
You have a piece of advice for him? We really need to get this man to start investing.
2 words, start today. I think just if you are able to commit to the act of investing, and one thing I can tell you is the good thing with mutual funds is you can even start off with $1,000 or $500. So what I can tell you is go to Moneyjar today, start a small jar, $500, $1,000. That's nothing. That's 3 beers, right?
Yeah.
Or 2 now, considering how prices in Bombay are. But yeah, if you want to just start, and with a safe mutual fund and see how it benefits you, and then slowly you can then get into different kinds of mutual funds. And trust me, coming from a guy that started investing when I was 19 or 20 years old, like just yeah,
oh my god,
just starting to invest creates a very powerful series of events that you'll be thankful for the rest of your life.
There is Sushant who's just come in. He's asking us, which is the best mutual fund to invest in right now?
Hi Sushant. Okay, great question. Yeah, so a lot of people who are existing investors always look for like recommendations on specific mutual funds. So I mean, like a lot of times we tend not to give such advice because it may not be appropriate for everyone.
Yeah.
But on the equity side, a couple of suggestions that I have. Look at pharma funds. So pharmaceuticals as a sector has underperformed in the last few years. But I feel going forward, pharma will stage a comeback. So there are certain funds that only invest in good pharmaceutical companies, and they do the stock picking for you. So definitely look for that. In that, I would recommend the Reliance Pharma Fund and a new fund that's come out called the Mirai Healthcare Fund, which I think Mirai as a fund house is a really has good investment strategy. And there is another contrarian view that we have is a fund called the ICICI Focused Equity Fund. So it's not done well in the last few years, but we feel that will do well going forward because it has a very undervalued portfolio.
So there is a very interesting question from Swarang.
Yeah.
So,
hi Swarang.
So the question is, at the moment, the blue chip stocks seem to be going up, stagnating, but whereas mid cap, small cap have taken some hit.
Sure.
That said, isn't it a great time to invest in mid cap and small cap funds from a long term perspective, say 5 years plus, which is where the max gains come from?
Sure. Swarang, great question. So it's true that right now, large caps or blue chips have kind of held their value while mid caps and small caps have, gotten negative returns. I'll tell you one thing about mid caps and small caps is that over the course of the last few years, they've run up a lot, like way more than their fundamentals dictate. So the problem is, even though they have corrected in the past, say a month or so, they are still as a whole overvalued by a significant amount. Now, your question about investing for the long term, so say like investing with a 5-year, 7-year horizon, is pretty valid. But in my experience, what I've seen is, even though if you say that I'm in it for the long term, that I'm ready to invest for 5 years, say if you see a 20% correction or a 30% correction, it is very common for people to redeem their funds in panic or like out of being scared being in the market. So to combat that, what I would suggest you is to invest in large caps right now, and tactically shift to mid caps or small caps if and when there is a deeper correction. So my advice to you would be to stick to large caps and multi caps right now, to not invest in mid caps and small caps because they're still overvalued.
Okay. We have one more question, which is by Pratik.
Sure.
Are you looking to expand Moneyjar to handle other investments such as insurance?
Yeah, great question, Pratik. And right since we started Moneyjar, we were clear that our long-term vision is to become an online bank and a bank that people actually love interacting with. Vinita, have you heard anyone say that they love interacting with a bank?
Honestly, not.
Good.
But at the risk of sounding
Sure.
very, very cocky, I would say that I have absolutely enjoyed the Moneyjar platform.
Sure, yeah.
I'd say everyone should go and try it once. It's really, it's fun.
And you have no bias
I
whatsoever.
have no bias because I was like
Yeah.
a non-investor before
Sure,
I
but
knew about it.
yeah, I think our vision with Moneyjar is to provide a level of customer experience that people typically don't get from financial services, and mutual funds is only the start. We definitely want to get into insurance, into other such like even lending, and maybe into other asset classes also like stocks, fixed deposits, things like that. So stay tuned, Pradeep. We're only getting started. And another thing, go ahead.
And I'm just saying, you want to finish?
Sure, yeah. And another thing that I want to stress is even for NRI, so people that don't live in India and who are Indian citizens, we have figured out a way for them to invest completely online without any paperwork whatsoever. So if you know someone or if you are an NRI and who would like to invest in the Indian markets, definitely give us a shout. We will be able to help you out, make investments completely online.
I know we want to carry on, but I think we have time for just one more question.
Sure, yeah, let's do one.
So this is, can we create a custom jar or work with a team to have custom jar created for us across specific outputs?
Sure.
Do you charge anything extra for such services?
Sure, really great question.
This is Prateek again.
Yeah.
He's a fan. We have a fan.
Thanks, Prateek, for your question. That's a great question. So in the last month, we have actually come up with functionality where people say they come on the website who typically experienced investors who know some of the funds that they want or don't want to have, and they don't like any of the jars that they see. Although we think those are the best possible funds, if there is someone who wants their own custom jar, we have a functionality where they just contact us, let us know the funds they are looking for, or we advise them on a custom jar based on their specific needs, and we are able to create that and put that on their dashboard. After which they can just invest through that jar, and that service is completely free. We don't believe that is something we should charge for. That is something that is included in our basic services that we would provide to our users. So yeah, if anyone wants a custom jar, do get in touch with us. We would be happy to set one up for you.
Yeah. So I think that's about it for now. Rohan, you want to give them any goodbyes?
I think this was a great session. It's really good to speak to our users in such a dynamic environment, and I hope we can do this more often. And in the meantime, if anyone has any questions that they would like to be answered specifically for our next session, just let us know.
Leave a message in the comments. You can message us directly.
Sure.
And I hope this was helpful, because it sure was for me.
Yeah. Bye guys. Have a good week ahead. Happy investing.
Moneyjar, moneyjar.